right, what's going on, folks? Happy September 11th, 2025. Well, as happy as we can be on September 11th, 2025. But welcome to the Crypto Report. Joined here, my name is Hamilton, joined here by our co-host, Josh. Josh, how you doing?
Doing fantastic. What's
Great.
looking at the charts? What's not to be happy about?
Yeah, a lot of stuff going on in the world right now. This is going to give us a little bit of a respite, I suppose, by looking at some charts. So, folks, first things first. If you're watching over on the YouTube, feel free to talk to us in chat, ask questions, specific charts you want to look at. Josh and I are going to be going through a bunch of this stuff over the next 25 to 30 minutes, but we would love to be able to answer some questions. And I think the first thing I want to point out here is not only are we bullish crypto, but let's pump the brakes for a second and give a shout out. Yes, a shout out to members of TTI. Over the last 2 days, we've been able to turn nearly 8 positions free. Article I came out with just about 45 minutes ago, The Art of Taking Profit. This directly correlates to the crypto market as well. I just want to bring up kind of a bigger idea here. For those of you that are here to make money, if you're here to make money, there's this old adage by Mr. One Gordon Gekko that says greed, as a matter of fact, is good. If there's one thing you take away from today's session, other than the fact that we're still in primary uptrends, it's that you should not close your best trades early because you're up an arbitrary amount of profit. Folks, you're in a goddamn bull market. If you're afraid to hold for the bigger picture, I can't help you. But for those of you that are actually here to make a lot of money, which I'm assuming most of you are, you need to learn how to manage your risk to the upside and not close the whole goddamn position because you're afraid of your own shadow or because you think, I'm up 30, 40%, this is enough for me. Fuck that. Make more. Bet more. Bull market. So shout out to the guys inside of TTI. Quick little rundown. Look at how many goddamn positions we've been able to turn free over the last couple of days. I mean, hundreds of percent. This is in the middle of a market where most people expect us to die back down, and yet we're across the board closing trades left and right, half off here, half off there. Big wins in APH, 800%, Google up 500%, IREN is up way more than 500% as of right now. This was a couple of days ago. Flipping trades free, holding for the bigger move is the way to make money in the market. Folks, there's no other way to put it. So again, shout out to TTI members. And that was it. That was my promo. For those of you that are interested in making a lot of money, you should join TTI. Josh, what do you think?
I would say, everything you just said, and shout out to the fact that they're ignoring the noise. You go on social media, ignoring real world events, but if we're talking solely markets, everyone's calling for a top. Everyone said it's over. Everyone says exit all your positions. TTI stays winning. We don't.
I mean, most people are
adhere.
fucking morons. I can say that. I'm the guy. I'm the guy at the top, so I can say that. I don't care if people don't like me. Most people don't know what the fuck they're talking about. It's just that simple. They don't know what they're doing. Kind of the good thing and the bad thing about markets in general, but FinTwit, is that everybody has an opinion. And I'm fully 100% in agreement that not every opinion is worth the same. I'm not going to listen to somebody that has $500 in a Robinhood account that started trading 3 months ago. I don't give a shit about what they think about markets. Until you've gone through multiple cycles, you've proven that you can consistently make a couple dollars in the market. I just don't give a shit about what you think. And I think that's what's really great about TTI is we have that ingrained in us. That a lot of the stuff that we read on Twitter, we listen to it on fucking TikTok, on the news, on Bloomberg, when you're driving into work, listening to Bloomberg surveillance, a lot of this stuff is just what you said, noise. So find a way to filter through that, get to what is actually profitable, which for us is technical analysis and mainly price, and focus on that. So let's get into that. Start with Bitcoin, right? As you said, everybody said Bitcoin was top. That was it. I was seeing, 100 to 500,000 follower accounts. They've built their entire personality around crypto. And a couple of weeks ago, upwards of like a week ago, actually, they were, well, what happens if that's the top for the cycle? What happens if, this shit is just, it's FUD. Whether they believe it or not, it's just engagement bait. But people really take that shit to heart. So Josh, do you think we've topped for this cycle in Bitcoin?
I mean, personally, fuck no.
No. So tell me why.
I mean, it just honestly, there's so much bullshit out there saying we've topped that's just doesn't make any sense. Everyone's talking about, oh, it's the same as every cycle. This always happens. It's the exact same. Yet the proof people are showing or the technical analysis they're using from years past doesn't even line up the same. They'll say, oh, look, it's the exact same as the 2021 top. We already had our altcoin season. Then we pull up total three and we see, oh, we haven't even broken the previous all-time high by
We were
more
just
than
talking about
1%.
this morning inside of the Discord. Look at this. This is your total
Just
crypto market cap without Bitcoin and Ethereum. We haven't even broken out into all-time highs.
exactly. It's absolute lunacy. And the fact, hey, let's look back on the last 2 years on Bitcoin. Every time we've lost a key range, we lost that kind of 112K area and trended down. Bitcoin has V-shaped recovery out. I think what's really fucking with people is that the ETFs have had a very large impact on Bitcoin and crypto early on pre-halving. So everyone kind of sped up their cycle timelines and everyone's trying to make it fit perfectly into this classic 4-year crypto timeline. And I just don't think that's the case anymore. And, maybe that's going against the grain, but I think it's going to break that. We have a liquidity surge and injection coming in a week, 2 weeks, expected with rate cuts. You have the world being extremely open to crypto now. You have public spot ETFs that hold 3 to 4% of Bitcoin, and Ethereum also getting that kind of love. Like, the world's in a very different place when it comes to financial markets and financial tools like cryptocurrency. And so for people to think that we're going to stay on this exact 4-year cycle that was managed by a handful of whales, when now you have the names of BlackRock, Fidelity, all the big boys, all of Wall Street in it. It just doesn't make sense. And the chart's showing that, whether it's total 3, whether it's Bitcoin dominance, whether it's the actual Bitcoin chart, Ethereum chart, you pull it up, people, Bitcoin against gold, Bitcoin against XLK, none of those charts have seen that explosion that people who are talking about all these cycles would see every single cycle.
I'm going to go in my bag really quick, and I'm going to pull up a great example of this. Everybody wanted institutional hands into crypto because obviously they think, well, listen, if institutions are interested, that's a lot more buying power on the side of the bull case. These assets are going to go up in value. And while they're not technically wrong, I do want to point something out. For those of you that are older, and I'm dating myself here, I'm only 36, so I was not trading during this time period. But as a student of market history, if you go back and you look at some of the best traders in the 80s, one group in particular stands out, the turtle traders, right? Turtle traders came around, Richard Dennis built this ragtag team of traders that absolutely killed the markets in the 80s. What were they trading? They were trading commodities, futures. At what stage of the market cycle for commodities futures were essentially the 80s? They were essentially the 2013 to 2018, or maybe even to 2020 stage of Bitcoin. They were the wild, wild west. Volatility was everywhere. They were I should actually say that they were under-regulated. There was a lot of riffraff there, but with the riffraff and the volatility comes opportunity for traders. You need volatility to trade the market. You need to be able to buy low and sell high, or sell high and cover low. When you lack that volatility, when it starts to dry up, the opportunities to trade become fewer and fewer. And so what we're seeing now, as you said, the normal 4-year cycle doesn't make sense. Everybody wanted institutions in on this stuff. Institutions are coming in. Volatility is a fraction of what it was 10 years ago, folks, and it's only going to diminish more. And I think that's part of the reason why you see a lot of the older OG style of traders coming out of like the 2015 through 2018 class that have, struggled a little bit. Not necessarily because they're not rich or whatever, although a lot of them aren't. Think about that. How many crypto Twitter accounts have 2016 join dates and they're still retweeting free giveaways? So just because you're interested in crypto for the last 10 years does not mean you've made money. A lot of this stuff is you doubt yourself. A lot of this stuff is your expectations are just absolutely shit. Like you said, people expect market to have topped here because of a 4-year cycle. It's absolute horseshit. Liquidity is coming, which is the number one reason why crypto pumps to begin with. It's not just interest rates, although that's part of it. Global liquidity is at an all-time high. As global liquidity continues to expand, it permeates through everything, including markets, and permeates down the risk scale, right? And crypto, as far as I'm aware, is just about one of the most risky areas you can be invested in right now. And so obviously that liquidity will find its way through the market into the riskiest assets. And that's what drives these primary trends. And that's exactly what we're seeing. Bitcoin is still in a primary uptrend. And for those of you that are students to momentum and relative strength and trend like we are inside of TTI, all you have to do is take a look at the RSI. If the RSI is trending above the 50 more than below the 50, you're within a bullish momentum regime and you want to remain long, at least bull biased. And look what happens during bear markets, folks. The RSI starts to trend below the 50 and stays below the 50 for the most part. That's generally when you're going to want to look for shorts or to wait to buy more longs, at least from a trading standpoint. So once again, back to the napkin RSI. What is it telling you? More up or more down? It's more up. It's got that goddamn simple. Am I missing something here? Am I crazy for thinking that it can just be that simple?
No, and too many folks overcomplicate it, right? You have people selling indicators for TradingView, and they're trying to track every single thing possible so that, give you the perfect signal. When sell the top, buy the bottom, make it perfect. It's
all bullshit,
BS.
by the way. You can't do that.
I am willing to bet that, yourself or almost anyone in TTI, we could give them a clean chart, no moving averages, no fucking fancy indicators, and they would be able to successfully trade those charts if the setups are there. Like, you don't need all of those to
How about
make
this?
money in this
For those of you watching this
market.
right now, would you be able to trade a market if there was no candlesticks at all? Let's say there's just a 200-day moving average. Everybody should know what a 200-day moving average is used for. So I help identify a primary uptrend. If this thing is trending up and we're sloped up, would you be able to, what would you assume is going to happen? Up or down, right? Can it be this simple?
Exactly.
Just turn off price and look at a moving average. Or you can turn off the moving average and just look priced if we're hitting higher highs on a weekly or monthly scale. This is what I don't understand. It's like people want the market to fall, not necessarily because they're going to make a bunch of money, but because they're assholes and they missed out on the opportunities at 70 grand, for example, or the opportunities coming out of October of 2023 back here. We got long originally October of 2023 on this candle. We've been long the entire time. The entire time. And nothing has changed. Primary trend remains up. There's been times of frustration. We've had like 4, 6, 8 weeks straight of crypto reports come out where we're like, nothing's really happening yet, but we're still long. And then all of a sudden we get this big spurt, and we get this big spurt, and then we get this big spurt, and I think it's coming again. I think, feel free to call me out, but I'm going to say this now, and we're going to try to prove it over the next 15 minutes. It appears that the crypto market has bottomed. It appears 100%. That Bitcoin and Ethereum and a lot of these altcoins are showing you rounded bottom about to be breakouts to new highs. Yes, we've done nothing for the last couple of weeks, and people with goldfish brains go absolutely berserk when their crypto coins don't go up 47% every day. But that's not my fault. That's not my game. My game is to make money, not sit here and tweet on the 5-minute chart to give a bunch of fucking ADD TikTok brain rot traders ammunition to be long or short. You want to make money, stick with the primary trend. Primary trend is long. Josh, give me a price target. Where do you think we go next from here? We're currently trading 115. I think the breakout that's going to spur a bunch of people back into the market's 120. Where do you think this next kind of short oscillation ends?
Well, so what I'm kind of looking for is I think we're going to get up to 144-ish area on the next leg, and then kind of get it tap up to 150, maybe have some consolidation, maybe similar to the last few months, few weeks, and then I'm maintaining my target of 188 or higher. By the end of the cycle. Now, is that December? Is that mid of next year? I have no idea, and I'm not in the market to time the top, both in dollar exact number or the date. But that's what I'm looking at. So I'm looking at the next move to 144. And we mentioned volatility just a moment ago. You can search in TradingView for BVOL7D, which is Bitcoin's historical volatility index on a 7-day time frame. We are at multi-decade, maybe not decade, multi-year lows here. And I'm just, even with diminishing returns of volatility as adoption increases, we can expect a spike. Think of this almost kind of like
a Bollinger Band breakout. For those of you that have ever gone through the infamous Baby Pips technical course, or you've spent 5 minutes on TA on YouTube, you're going to know what a Bollinger Band is. When those Bollinger Bands get really tight, that standard deviation around price gets really, really low, you expect a resolution. It doesn't necessarily have to be up or down, but that volatility squeeze ends up with this massive breakout or breakdown. And obviously, if you're looking for which direction is this volatility squeeze going to go towards? You have to give edge to the direction of the underlying primary trend, which is up. 100% on board with you. As a matter of fact, not only do I think we get a volatility spike, but we added into IBIT down here at this proprietary gray box, which is simply a resistance turn support level. Why would you not? If you want to get long Bitcoin, this is a perfect and logical area to get long. We added more exposure here, and at least in the short term, it's worked for us, right? We've been able to see a positive return almost immediately on this IBIT position. And I think that was potentially the bottom. I do think we get a positive resolution higher, and IBIT will be at $78 by the end of the year. I don't think it's an if. I just don't know exactly when it's going to happen, and we're going to make a bunch of money when it does happen. I want to shift gears though really quick. I want to talk about Ethereum because obviously this is one of the biggest trades that we've had all year. We nailed the bottom here at the 2000-ish area back on May 8th, and we've systematically added in over the last couple of months. We've slowed down our ads over the last couple of weeks as we've consolidated here at all-time highs. But is it reasonable to expect Ethereum is topped, or just like Bitcoin, do you think that we are going to resolve higher in the direction of the primary trend?
I think there is no fucking way that Ethereum is topped right now. I mean, hey,
Hell yeah.
maybe
Hell yeah.
there's some grave dance, but there's no shot. And people, we can all talk about strength and ETH BTC and Sol ETH and all that, and ETH's lost a little bit of momentum. ETH has outperformed the entire summer. Like, we grabbed that pivot at the ETH BTC bottom and I started buying at about $1,950. Since then we're up let's call it 125% spot, and we have massive options ETH positions. Like, it's just taking a breather, and that ETH BTC chart you've shown, it has pullbacks when other things outperform, but because we're looking at weekly, monthly, quarterly time frames, we can hold our ETH positions, let that succeed in the long run, as well as even in the short run, as well as adding to Bitcoin and Solana. There's too many people who complain about, oh, you can only hold ETH, you can only hold Bitcoin, you can only hold Solana. Like, we're here to make money. ETH's not topped. It's likely going significantly higher. So this consolidation over the last month has really offered folks who just either were too lazy or didn't want to buy any of the previous breakouts, whether that's 2,700, 3,000, 3,950 or otherwise, an opportunity to get long before the next leg up that we've been consolidating on for, a month now, and had 5 days of price action that ended at the exact same price every single day.
This is going higher. There's no doubt in my mind. I'm positioned for it. I want to give you a shout out though, because you're right. We're up over 100% spot, and the options trades that we're in right now, just, to give the audience a taste, our August ETHA positions, which we opened up in May, went for nearly 2,000% profit. 2,000. I don't give a shit what you think about Ethereum or Vitalik. I don't care about what you think if Tom Lee's right about Wall Street adopting Ethereum and that being the next. I don't care. I don't have to give back that 2,000% profit that I made, so I don't give a shit about your opinion until you're paying my bills or fucking me. I don't care about what you think. And then we rolled some of that into the September contracts. What did those go for? Over 1,000. Then what did we do? We went out and bought December's of 2025s, January of 2026s, and January of 2027s. All three of those are over 100% and free. So again, let's pretend there's some epic meltdown in Ethereum and we don't go higher. Let's say this is topped out. We lose nothing. We lose zero. We've already taken our original risk out of the trade. The only thing we're going to lose is house profits, which is fine, because the reality is our potential reward is theoretically infinite and our risk is zero. Therefore, it's in our best interest to leave these trades on. No, I don't think Ethereum is topped. I think most people get bearish at all-time highs because they don't understand trend. All-time highs is a great time, historically, to go long because you can use that all-time high pivot as a new risk level. If Ethereum breaks back up from over 4,750 or 5,000, guarantee you people are going to be aping back in, and all of the people that were sitting there on the sidelines saying Ethereum top are all of a sudden going to be Ethereum bulls again. We're within a bullish momentum regime. Primary trend is higher. It was the number one performing blue chip crypto over the summer. You have the world's loudest Wall Street cheerleader on its side now, with both Tom Lee and even Dan Ives now is talking about Ethereum. If you think this thing is topped, sit back and learn something, because it's probably not. I think we're going a lot higher. And, you're talking about ratios between Bitcoin and Solana. Ethereum was our number one hold, right? We aptly timed that Ethereum Bitcoin bottom here. Let's use the Coinbase chart here where everything's kind of laid out still. We nailed this. We bought down here because, hey, guess what? Last time we were down here, it led to a 400% outperformance in Ethereum versus Bitcoin over 2 years. We expect the same thing to happen. And so we grabbed it and it's played out. Bitcoin has not performed as well as Ethereum. But what did we see a couple weeks ago when Ethereum started to top out? We're not dumb. We rotated some of that capital into Solana. And over the last couple of weeks, since we started to do that, Solana has outperformed Ethereum by over 25%. So again, nothing we do is on accident. Everything we do has a very logical process of why we're doing the things that we do. And I think now is probably a good time actually to segue into the Solana trade and why we expect Solana to probably be a better trade from this standpoint right here, adding new exposure than maybe Ethereum and Bitcoin. What do we have for Solana here?
Well, I'm just going to add 3 really quick points on Ethereum and just kind of bullet point through them. One, people who get bearish on Ethereum or whatever crypto asset always get bearish at the bottom. You know, if they were calling at the 49.55 all-time high touch saying, you know what, I think that this is going to pull back. This has been a pretty extended run. You know, props to them if they actually made money off that. 2, the 200-day moving average on simple moving average on Ethereum, for the first time in what feels like years, is actually sloping up and to the right now. Do we think that just as soon as you start sloping, it's over? Probably not. 2, your comments about RSI earlier. We've been just trending and holding that 50 RSI perfectly for the last 2 weeks. That is a bullish momentum regime. That is a bottom being put in. This is going so much higher. Okay, switching over to Solana.
Really quick, let me throw a quote out there. Bull markets do not end on depression. Bull markets end on exuberance. Bull markets end when you want to mortgage your goddamn house and go all in on an asset because your buddy, next door just bought a boat and he's an idiot. That's when markets top. Right now, we can see this not only in the crypto market, but the TradFi market. TradFi market every Thursday comes out with the AAII investor survey. You know, the retail investors that go out and buy stuff. They're the guys on FinTwit telling you how to think. These guys have been bearish. And not only are they bearish, but they've been historically bearish for the last 5 or 6 weeks straight, even as markets grind higher. So no, if you take that into consideration, I don't think markets have topped crypto or TradFi because there's too many people out there that expect them to have topped. And that's not when markets tend to top. They tend to top when everybody is overextended with leverage and then they pull the rug, right? So let's go to Solana really quick. I absolutely agree with you. Great point on the RSI holding that. Bullish momentum regime as well. And like I said, Solana is kind of the trade here that we've been adding more into lately than Ethereum and Bitcoin because we already have footholds in here. And remember, our objective is to make money. That is why you are in the markets. So from a trading perspective, which chart offers the best trade opportunity right now? It's not which one do you like the most from a utility standpoint or a founder standpoint or whatever. It's which chart offers the best risk to reward. I say Solana. I would be happy if you disagreed with me, Josh, but feel free. Let me know what you think about Solana here in terms of Bitcoin and Ethereum.
I mean, Solana looks good here. We finally got above some of those key levels, and it's hard. We've talked about in TTI is that Solana has such a significantly smaller market cap than Ethereum, is that it can move so much more aggressively, and so Solana probably is the better R2R, depending how that strength looks. In my personal imagination, I think that Solana outperforms for the next little while, and then once Ethereum starts going, they kind of go back and forth and trade. And the benefit in TTI is we have exposure to both. So we don't have to keep timing tops and selling one into the other. We used risk-free capital from the Ethereum trades to prop up our Solana position.
Exactly, and that's it. That's the main thing, is if you can grab these positions and turn them free through options by closing half at 100%, you now have a bunch of capital that you can rotate back into newer positions and let those hit 100%. Then pull back your capital, then go into a new one. And next thing you know, you have 5 to 10 positions, risk-free, that you've already closed half at 100%, that you can just sit there and let go for the next 6 months, and you don't have to worry about it. Some of them are going to be big winners. Some of them you might close for minor wins. None of them are going to be losses. You've already closed half at 100%. So even if, let's say, a contract goes to 150%, the trade kind of fails, chart starts to break down, you close for only a 10% profit, that is still a profit. Even at negative 50%, you close a contract at negative 50%, that's still profit. I don't think people understand that because you've already taken your original capital out. So That's exactly what we're doing. I'm so glad you brought it up. We took money away from the August and September Ethereum plays that were already up thousands of percent and used that house money to establish position in Solana. And as of right now, Solana is working well. And to your point as well, I'm 100% in agreement. Ethereum is still personally it's my biggest position on my books right now. It's the biggest thing that I own. I don't want to get rid of that. Just because I'm sitting here saying Solana might be a better trade from this standpoint does not mean I'm selling everything in Ethereum. Because if Solana doesn't end up being a better trade than Ethereum, why the hell would I give up my incredible competitive advantage owning Ethereum before every other asshole completely free? I don't want to do that. Right? So I need to point that out. Just because I'm saying I like Solana here from a chart standpoint, a risk reward standpoint, better than Ethereum for new capital, doesn't mean I want to close all of my Ethereum.
Exactly. And so, Solana is likely going to continue to outperform, probably go towards 260. And as long as we keep punching in higher highs and higher lows, then it looks great, right? It has the jump on Bitcoin and Ethereum. And so let's take advantage of that. If we get a nice deep pullback, assuming it's a higher low, like that's a good pivot point to be buying. I think one thing that a lot of people in crypto and even in equities, whether real life or maybe even TTIs, everybody gets excited on those big green candles and starts FOMOing it. And I think what's important for at least the folks in TTI and going to our conversation on volatility is that you need to be buying when things are boring, right? That's when we make the most money. Something we talk about all the time. People will see the big profits coming out of TTI. Someone's made $50,000 this week or $10,000 on a trade. And that's because we're putting the work in when times are boring, when volatility is low. So that when it does kick up and those chart setups are primed, then we can sit back and relax and watch those kind of dollars accumulate. Same thing with Solana, right? It's been chopping, Ethereum's been chopping, Bitcoin's been chopping. These are the times to add before that volatility explodes. And so, every pullback on Solana, because we're going to get pullbacks regardless of what people think, those are the opportunities to buy, not when it keeps surging higher.
I think you're right. One thing from an option standpoint, folks, just so you're well aware, because Josh brought this up and it's absolutely right. If you're buying options contracts on huge up days and you're going long, I mean, God bless your heart, because you're not only paying more due to the directional play of the contract pumping in premium, you're also paying more because implied volatility is spiking, right? So if you can get in while volatility is low and there's like reasoning or evidence to support that implied volatility is going to spike with a bigger move, you want to get in then before it happens. Yes, it always kind of feels risky, right? And let's be honest, you have to learn to get comfortable being uncomfortable. You have to learn to go on Twitter and watch YouTube videos where people say you're a fucking moron for buying here, and just realize that my edge or your edge is in trend, relative strength, and momentum. What this guy sees might not have anything to do with any of those, but we know that those three factors through the profits or profits framework are why we exist. It's why we're able to extract capital from the market on a consistent basis. So if all of those three things line up, implied volatility is low, you want to get in a position, ignore the noise, buy the contracts from an option standpoint. Or if you're just trading spot, that's great too. You're going to get the benefits of a volatility expansion through directional price action. So that's fine too. But specifically from an option standpoint, you want to buy before implied volatility spikes. Because if you're buying afterwards, you're paying an incredible amount of premium for that same position some other asshole bought a couple days prior. And let's pretend Solana breaks out above 260. Everyone's going to ape in. I'm telling you now, it's going to happen because it's the all-time high pivot. Everybody has the same level on the chart for Solana at 260. If we run, next PT up's like 415 based off fibs. I mean, this is not rocket science. You just draw a fib at the all-time high. Pivot higher is 415. What happens if Solana breaks above 260, let's say hits 300, and then pulls all the way back to 260? And you got guys buying at 280 and 290. Let's say you're buying SOLZ or some other options-related play in Solana. You're going to lose two ways. You're going to lose from price falling down and implied volatility contracting. And so your contracts are going to go from whatever they're potentially up to down by a lot very quickly. That's what we want to try to get ahead of, getting in before the implied volatility spikes so we get the benefits of both of those Greeks paying us out. Do you have a trade you want to go through really quick before we call it?
I don't think I have anything right now. A lot of altcoins are still chopping pretty heavily. There's some decent stuff, but we can pull up the let's pull up the Doge chart because they are apparently getting their own ETF, which is kind of insane.
I want to talk Total 3 really quick, and then we're going to go into Doge right after that because Doge fits this. People want to sit here and say that the crypto, this is it, the crypto bubble's over, like this cycle is done. Here's your total crypto market cap without Bitcoin and Ethereum. This includes Solana, this includes Doge, this includes Ripple. We haven't even gotten started. Am I wrong?
No, I mean you know me. We're very much aligned on this. That people are going to be caught incredibly offside when this market explodes and the frenzy occurs over what might be a 2 to 4 month period, and that part of that sidelined capital flowing in is what's going to push us even higher as people kind of freak out and go realize, oh shit, I fucked up and I'm not allocated to the industry that I sit on and read Twitter all day, every day for the last 5 years because I listened to some idiot say the top was in.
No such thing as a triple top, folks. Just calling that out now. Let's go through Doge and we'll call it a session. What do we think here with Doge?
Doge looks fantastic. I mean, above 25, 26 cents, I would be looking to get long this. It's essentially been in a kind of an ugly stage one since that late 2024 push after the Trump election. And, this thing's like $40 billion market cap and is going to go significantly higher. So I'd be looking to get exposure above 26 cents, I'd say, and then targeting a move to 48 cents in the previous high and then kind of going from there and seeing if it wants to break the previous all-time high at 74 cents, I believe it was, or 69 cents, and then targeting $1. But, Doge is one of those names that every person in crypto or equities, around the world knows. And you can expect when that frenzy starts, that names like this are going to pick up. Something I've harped on for months is that there are a number of different sectors inside of crypto, right? You have layer ones, you have utility coins, you have projects and coins that have revenue, think Hyperliquid, and then you have meme coins, you have AI coins. Memes and AI have historically for the last 3 years been the ones to lead frenzies and rally, right? These sectors run hard in tandem with Bitcoin, Ethereum, Solana, whichever of the big majors is running. And then it kind of trickles down to, DeFi, layer twos, layer ones, etc., or beta to whatever blue chip is running. And so you can expect, if you're following the trend that we believe volatility is going to explode soon, and we're going to see big moves in the big three, let's call them Bitcoin, Ethereum, Solana, names like Doge and other meme coins are going to absolutely explode. In the 2021 cycle, you have names like Shiba Inu. It went from a $3 billion market cap to $44 billion market cap in less than a week.
Yep.
Like that is the frenzy we're talking about.
Guys, if you don't understand seasonality, I'm not going to sit here and pretend to convince you that seasonality matters. What I am going to tell you, going back to 1950, the best 6 months start in October, and the best 3 months of the entire year are November, December, and January. You don't believe me? Go back and look at October on all of these beautiful charts. When do the runs start? They start in October, folks. You don't need to believe me, but I'm going to tell you right now, 258% in 2023. Doge 300% in 2024. Let's pretend we fast forward a couple of weeks here and we're starting at that 26th level that Josh is saying, a 200% move. If we're in the same sort of liquidity cycle that we expect we are, that's an 80-cent Doge. I'm not saying Doge is going to go to 80 cents. I am telling you though, if you're looking for a reason to be bearish, this is probably one of the worst times to get bearish. Not only are trends higher, but seasonality picks up next month, and I think you're going to be pretty pissed off. So short at your own dismay. Josh, as always, it's been great. Hopefully more and more people are listening to this. Hopefully they heed your warning. Markets are going higher, whether you want to own them or not. Just don't be a bitch and cry if you don't own it, right?
Exactly, 100%. It's always a pleasure chatting, and I'm looking forward to prices being higher next week, let's hope.
No